So you're trying to figure out how do credit builder loans work? Well, in this video, I'm going to teach you exactly how they work. I'm also going to share with you the most important things you should be focusing on right now when it comes to building your credit. So you definitely want to stick with me all the way through this video so you don't miss anything. Now, my name is Rakeem Madison, and with that being said, we're going to go ahead and jump right into today's content. All right, so we're here on my Google Doc and I'm about to go through the process with you so you can have complete clarity on exactly how this whole thing works. All right, so now if you see right here, it says step number 1, the lender opens a savings account, right? So typically you're gonna go to a bank and the bank is going to open you up an account. Now, when they open you up an account, at this particular point, you're going to start to make payments, which is step number 2. So step number 2, you see it says you start making payments on that loan. Now, at this particular point, you're probably like, okay, well, how does this actually bring me benefit now? Well, that's where we go on to step number 3. So you see right here, it says the lender reports your payments to the major credit bureaus every month, good or bad. So here's my recommendation for you. When you do this, it's gonna be key that you actually start to make your payments on time, because in the case where you start to miss payments or you're late or whatever, that's going to drop your credit score significantly. So it's best that you be disciplined, put it in your mind that you're going to actually do this so you can help boost up your credit history. Now, what I want to do is I want to break down, the most important things since we're kind of on that topic of the credit. Now, let's go over here to my other Google Doc where I give you the breakdown of what's actually important when it comes to building your credit. Okay, so the first thing is the payment history, right? This right here is the biggest thing. As I said, if you miss payments on your credit, if you not your credit, if you miss payments, you're gonna get a massive drop. I'm talking 50 to 70 points. And there's been people that have told me they've seen even larger drops than that, right? So the payment history is very, very important, right? That takes up 35% of your score. Now, the next thing is the credit utilization ratio. You can see that that's 30% right there. So already these first two, you could tell they have a huge effect on your credit. Whether you're doing bad, if you're doing bad, it's going to drop it. But if you're really focusing on these things, they're going to give you a massive boost in your credit, right? So what is credit utilization? If you got $20,000 worth of credit, and let's say, for instance, you're using 19,000 of that and it's reporting every month, that doesn't look good for you at all. Right? It doesn't look good. Now, let's flip that and say, okay, you got $20,000 worth of credit, but you're only using 1,000 or 2,000 or 3,000. Now your credit utilization is going to be better, and guess what's going to go up? Your credit score. Right? So these first two are very, very important. All right, let's go to the next thing. So the age of your credit. So the age is, as you continue to have credit over the years, your credit score should get better over time. But of course, you got to be doing the right things for that to happen, right? So that's kind of like a gimme if you think about it. All right, so now the next one is recent applications for credit. Now you got to be careful with this, because if lenders start to see like, okay, this person is just applying for credit, and they're getting disapproved, and they kind of see that as kind of like you're desperate, right? So this person is just trying to get credit so bad. No, and then that's going to actually harm you if you're doing that, right? So when you think about this, just kind of, use it, kind of do it to where you're kind of like, okay, I'm gonna apply for credit here. I'm gonna wait a couple of months so I can give me more of a boost, and then I'm gonna actually try to go for something again. You see what I mean? So give yourself time for this one. Now the next one is different types of credit, right? Now this is one of the ones that people don't really know. You know what I mean? Because if you have like an installment loan, and then you also have a car loan, and then you also have a mortgage loan, right? And you have like these different types of credit, that can actually bring benefit to you as well, which as you can see it makes up 10% of your credit score. The same thing with the recent applications for credit as well. So when you look at your credit score, understand that these are the 5 things that are gonna make up what your score actually is, okay? So definitely, if you got to screenshot this, or maybe you want me to create a PDF for you, or make this a PDF, and just let me know in the comments if you want me to do that. I'll just, go ahead and create it real quick, and I'll put it down below in the comments next to your as a reply. All right, so that's the credit score breakdown. Now let's go back over here to the steps. So in order for the bank to make money, or whatever the service is, they're going to have interest rates, right? So the common rates are 6% to 16%, as you can see here. Now it could be higher or it could be lower, right? It just depends on a couple different things, all right? Now that's how they'll be able to make money. Now the fifth step in this process is you have been paying, they have been reporting every single month to the major credit bureaus, as you've seen up above. And then at the end of whatever the term is, whether it's 12 or it's 24 months, you're going to get all the money that you've been paying back to you. Okay, so that's massive benefit when you think about it. So you've been paying this so you can build your credit, and then at the end you pretty much built up a savings account, and then you can leverage that, what you have been paying, you could use that to go invest into something or whatever it is that you want to use it for, but it has massive benefit. Now you're probably like, okay, well, this all sounds good, Rakeem, but where do I actually get a credit builder loan that's actually reliable? Well, I'm glad you asked, right? So I'm actually about to show you one that I personally use myself, and it's helped boost my score, and I just love it, right? So I'm going to show you the exact same one. All right, so this is how it works. So you can see right here, you apply for a credit builder account. Your money is safe and secure, no hard pull on your credit. That right there is key, right? You're not going to get a hard pull, so it's not going to drop your score at all. Pretty cool. All right, so now you can see here, pay off your credit builder account in a specified amount of time. So they're going to have either 12 or 24 months. Okay, and I'll show you the one I actually use myself, so you can kind of see where you want to go with that. And then each on-time monthly payment builds credit history and adds to your savings. Okay, so that's cool. And then unlock your savings. Once you've paid off your credit builder account, your CD unlocks and the money is yours minus fees and interest, just like I just broke down to you over on my Google Doc. Now, I want to take you over to the pricing page, right, to kind of show you how this all breaks down. So I'm going to bring it here, and this is actually the one that I do, the $25 a month thing, and I've been doing it for quite some time, and like I said, it's been a massive benefit to my credit score. Now you can see this is the breakdown. So today you'll pay a one-time non-refundable administrative fee of $9, and then every month after that you'll pay $25 for over a 24-month span. And then at that particular point, they're going to report every single time you pay, and the same thing goes for what I said, good and bad. If you're paying on time, okay, cool. But if you're not and you're missing payments and all that stuff, it's not going to benefit you, right? And I'm sure you're watching this video because you're trying to boost your credit score some kind of way, okay? So now the next thing is after 24 months, you've established credit history, and they show you exactly what you'll have in savings. So with my loan, you'll see I'll have $520 saved up, and I could use that for whatever I want to use it for, okay? Now, if you're doing the $35 one, okay, nothing really changes. You're still going to pay the $9 administrative fee, and then every month after that, for 2 years, 24 months, you're going to pay $35, which means after 2 years, you're going to have $724 saved. And if you do the 48, the same thing applies, but the only difference is once you get up to 48, then it's going to be 12 months that you're going to be paying $48, which means you're going to have $539 saved. And then if you go up to 150, and I really won't recommend going that high unless you feel like you can really be disciplined and actually make that payment every single month for a year, which you can see right here is 12 months, then go ahead and do that, okay? And then you'll see you'll save $1,663, and then you could use that for whatever you want to use it for, plus you built up your credit history. So that is how simple it is. This is my #1 recommended credit building tool. If you want to pick it up, it's the first link in the description. Full disclosure, that is an affiliate link, so if you do use it, I will get compensated in one way or another. Okay, so with that being said, hopefully you got some value from this video, and if you did, definitely go ahead and give me a thumbs up. Also, drop me a comment down below letting me know any additional questions that you have. And with that being said, I look forward to seeing you in the next video. Peace.